Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our M1 Finance Roth IRA buy of the week. So I am planning on buying one specific stock. I was planning on buying two, but I am having some issues currently with the M1 Finance platform, which I will go ahead and show with you guys. Some of the issues with having some of these newer, smaller brokers out there is that they may have some technical issues, and that happens from time to time. So I will be going over that. We will be going over another stock I was planning on maybe buying into the portfolio. It was actually what I was going to be buying first. It was a brand new stock into the portfolio. I've been looking for new stocks added into the portfolio. That way I have more variety of stocks that may possibly be going down into the negative for me. That way I can just buy up more of the same stocks that I want to be buying up. But we are going to be covering this specific stock and also some of the activity for the week. What are the portfolio up or down for the week? What stocks paid out dividends? And kind of go over what I am actually buying this week. So if you are brand new to the channel, have not yet subscribed, hit that subscribe button below. I cover the stock market, dividends, real estate. If you do enjoy this video, find it helpful, hit the thumbs up. And if you have any comments for yourself, want to drop a question below, drop some information, drop it into that comment section. I do read and reply to all your comments. And if you do have a question I believe will help all the viewers, subscribers out there, I will get your question and make a video out of it. That way it allows everyone to learn if it's a very generic question that a lot of investors would ask themselves. So let's go ahead and get into the video. I'm currently have stock futures up. Everything is looking very positive. I know we ended Friday in a bit of an off negative day, but that was because we had a bit of a sell-off into the weekend. A lot of investors are probably they know the G27s this week, and going into the weekend, they just didn't want to hold on to anything. But now we can see stock futures currently positive, showing that everything is currently looking like investors are very happy for what could come out of this week's sort of news and the G20 summit and all the other information. So we shall see how this kind of plays out here on Monday. I'm expecting another positive day for this week, another positive week, depending on how it all sort of plays out. But I believe this will be another positive week, and then we'll kind of hit a rough patch where we kind of need to cool off for a little bit because we did just have a 2-3% increase across the indexes for the past week. Now, currently we can see the portfolio overall still up very nicely. I know it's sitting near all-time highs. It is not sitting at an all-time high. Thursday was the all-time high. It did pull back slightly on Friday. We can see the 1 day here. Let's see if it shows. My portfolio was down 0.52, and this was primarily because of Altria. Altria took a big whack right over the head, down 4.5% on Friday. Stanley Black & Decker, ABM, and just a few others there down in the red. And then some of our positive companies there really just did not help keep the portfolio afloat for the day. So it did go down 0.5% there for Friday. Now overall for the 1 week, our performance is still pretty positive. They're not 2-3% like the indexes, but up 1.03%. Now, some of our biggest losers here were, of course, Altria selling off towards Friday. We have Kellogg's down almost 2%, Kimberly-Clark, Main Street Capital, CVS, ABM, JP Morgan, and Walgreens. So really not too bad in the sea of green. We do have a lot of green down here. Some of our biggest winners is Caterpillar coming up off those lows. I was expecting industrials to kind of begin to pop higher. We can see Caterpillar up 5.33%. I have been buying into Caterpillar here while it's been negative. Hopefully I'll be able to push this one just slightly higher here in the next few weeks, up to that value of about $600-700, and I'll leave that one alone. Also 3M, I'll probably push that one slightly higher into the $600-700 range. It's not too much further from that point. Cisco remains up there, up 4.17. Oil, Exxon, Chevron, the oil ETF as a whole, everything there within the oil sector is pretty much positive. Chevron up 3.41, and then Apple there. Those are my biggest winners of the week. Now, going over the activity tab, what stocks are currently paying out? I have $8.73, and I do have some estimated trades. And then we'll kind of go into what my current issue is with M1 Finance currently. It's 12 o'clock at night. It's basically midnight here on Sunday, and we're going into Monday. And that could be one of the issues. Maybe they're doing some sort of a maintenance in the background, but I'll show you what my issue is. So last week we had 3 companies pay out dividends. We had Avery Dennison paying out $274. We had Stanley Black & Decker paying out $255. and we had Consolidated Edison paying out $3.44. So total, last week I made roughly $8.73, which for a 1 week period, that's really good. On average now, I'm getting about $10 every single week. We can see the week prior, that was my biggest 1 week dividend payout. I made a whole video on Friday covering this one. Really good performance from a portfolio that is 1.5 years old, where it's now generating anywhere from $10 to $20 every single week. And it's really nice to just see these dividends get rolled in, and then they get reinvested into companies that I want to continue to hold, such as Caterpillar and 3M and Cardinal Health, and all of these have been bouncing back this week. If we look at the 3 companies there that I purchased on Monday for the 1 week, we can see that their performance, Caterpillar up towards the top, 3M also towards the top, and we have Cardinal Health here up 1.23%. So all of them across the board moving up very nice. Now, you can see here that I have a little trade indicator on Cardinal Health, and that is actually what my current buy is set to buy. Now, Cardinal Health, it's down almost 10% in my portfolio. It's down right around, let's go back this way. It's down 8.23%, about $40. Now, the reason I am buying into this specific company is because it is roughly down 10%. Plus, it's a drug wholesale, very similar to my Walgreens. It's going ex-dividend here in just 4 days. So on June 29th, it's going to be going ex-dividend. So that is this Friday coming up. As long as I buy and hold all these shares up until Friday, which I will be getting, I will be locking in a 4.31% starting yield on all these new shares. They have a very low payout ratio, and they have dividend growth for the past 14 years since 2005, and they are just kind of chugging along here. They have just raised their dividends. So here, when they are going ex-dividend here in the next Friday, they recently increased their dividend from 0.4763 to now 0.4811. So without having to, I have been buying up more shares, but that's why I'm getting such a higher starting yield, because they recently increased their dividend, and their share price should follow as they continue their growth forward. Their financials are all looking solid, and go from there. Now, I was planning to add another stock and actually went in here to cancel this full trade, but M1 Finance is currently having some issues here. So normally to cancel, if you were wanting to cancel some of your stocks going into the following day, first you would look for your stock that's trading, find it here. It has a little indicator that it's being traded. You would select it. Up towards the top, you would have the option to cancel. So you would select cancel, and then yes, you would confirm it. Well, guess what's going on? I am unable to. Here in the background, you can see something went wrong with your request. Please try again later or contact support. So even though here I can be slamming this thing, smashing that like button below, smashing this yes and cancel, nothing's really taking place. So the UI interface here could be having some issues here with the platform, or they could be doing some maintenance in the background. I really do not know, but overall, I'm unable to cancel this currently. We can see here, no matter what, I've tried logging out, tried refreshing, tried restarting my computer. Maybe it would be some sort of an issue with my computer, but highly doubtful. And just overall, have not been able to cancel out that error. So that is currently what my issue is. Now we can see here, as I click on the portfolio, now we can see that all these numbers are just kind of disappeared. So there is probably some sort of an issue there with the interface there. And as long, I'm not at all worried about putting all my cash. It's really not too much. My current estimated trade that I set for this is $130. How did I get $130? Well, I always add my weekly investment of $115.38. So $115.38. Plus I have cash there of $8.73. So that it's $124.11. So you're saying, hey, where are you getting your $130? Well, again, as I say in all my other videos, I really like to overshoot what I'm planning to add into Cardinal Health. Why? Because on Mondays, sometimes I have dividends that I were supposed to get paid out on Friday, and on M1, they pay out the following day. So if you're supposed to get paid out on Friday, you'll actually receive your dividend in cash in your account on Monday. So here I may have maybe $6 or so that roll in on Monday that I am not expecting, and that'll just get reinvested into Cardinal Health, and that's completely fine. Now, jumping quickly into the other company I was planning on adding in this week is a brand new company I took a look at over the weekend. Another investor subscriber dropped it into the comment section saying that he had recently bought it, and another one. And I did a little bit of, I did my research on it, taking a look at its financials, and it did really well across the board, sitting at what I would consider value right now, fairly good value. It's not high, it's not low in comparison to some of its competitors, and that is actually ticker symbol LVS. So I'll do a quick rundown of this one, but I do have another video that I recorded going over Las Vegas Sands in comparison to 5 of their competitors or within the same industry. Now, Las Vegas Sands, LVS is the ticker symbol. I was either invested in LVS or Wynn Resorts back some maybe 5-8 years ago, and it's a great dividend company. It's recently gone down with the trade war between the U.S. and China, and they run a hotel chain, resorts and casinos. And due to the trade war, they were looking at possibly their revenue, their income being hurt by this trade war, the growth kind of slowing down. But really, they've actually been steadily increasing their revenue and have continued to done well. So I believe that'll all kind of get blasted behind them in the last earnings whisper. Let's see if I can move my information over here and type in the ticker symbol there. If I look at their financials, everything is positive over the past 10 years. Here we can see revenue at $13.8 billion, net income at $1.5 billion, free cash flow at $3.17 billion. Now, you can see these numbers have kind of swayed, but starting back 10 years ago, 2009, percentage-wise, how far are we up? Well, revenue is up 10.1%. We have net income up 15 points. Now I'm just saying 100 over a 10-year, 101% for a 10-year. If you divide that by 10 over 10 years, their average is 10.1% for revenue, 15.6% there for net income, and their free cash flow is up at 2.14 thousand percent over the past 10 years. So very good financials. If you were to compare this to another, Hilton one was another one I kind of compared it to, or Wynn Resorts is another one I'll kind of compare it to really quick. I did these comparisons in my past video. We'll see Hilton down in revenue, down in free cash flow. Wynn Resorts down in free cash flow. Good, good revenue overall. Very similar to what Las Vegas Sands has, about that 100%. So it's anywhere between 10-13, and their free cash flow, their net income also positive in Wynn Resorts. So both of these companies are good overall. The Marriott is another really good. See if I can actually spell it correctly. Marriott Hotel. I can't spell it currently, but I compared these specific companies, and overall, Las Vegas Sands hit the bill. Plus, currently where they're trading with their valuation in comparison to their 50-day and 200-day moving average over the past year, they're just looking at they're sitting, right splat in the middle. They're not at highs. Highs for them currently, $80 is their highs way back about a year ago. But currently, due to the trade war that we started back in 2018, if we look at this period here, they were sitting at all-time highs midpoint 2018. Now, guess what we've been having the last year and a half? We've been in a trade war. And this trade war has caused investors to get really worrisome of Las Vegas Sands, lose a little bit of interest, get a little bit of volatility. Uncertainty is the word that I'm looking for there. The market does not like uncertainty, and a lot of investors have been kind of jumping ship, and this one has came down. It's got a lot of support at this $58 point. You can see here, $58. If we were to kind of take an arrow and shoot it across, it has a lot of support at this $58 point. That blue line there, if you follow the blue line, a lot of support there at that $58 point. That's $59.23 currently. Now, upside, it can hit $80 on the upside potentially. It could also fall, and that may happen. But let's go ahead and I'll pull up their earnings whisper. Now, they've been doing really well as far as their earnings. If we take a look at their last earnings, they beat expectations. They knocked out their earnings. They beat it by several. They were expecting 1.85. They came in at 0.91 per share. They were expecting $3.5 billion in their revenue. They came in at 3.6, so they beat expectations for the earnings. They beat expectations for the revenue. They're continuing to develop, have different destinations, offer premier, accommodations, and continue to grow. So as a result, their earnings is up 2.2%. That's really good in comparison to where they're expected, and their revenue is up 3.9% in comparison to where they're expected, and they have had growth over the past year of 1.9%. So even though we're in a trade war, their sales have not slowed. They're still hitting their reports. Their revenue year over year is still growing slightly, even though we're in a trade war. So overall, financials are intact, but their price has came down due to the trade war and the uncertainty in the market. And that is why I was looking at Las Vegas Sands as probably a really good buying opportunity right now. If it falls, it has a very small amount of room to fall over the current short term. It may fall into this 58, even as low back in 2016. If it does fall into this $40 point and I just continue to buy it, that's fine. It's currently offering me a 5.13. If it does fall, could offer me a 6% starting yield. And this company, they recently did start growing and paying out dividends back in 2013. So back in 2013, this company just started paying out dividends. So it started paying out dividends back in 2012, and since then has just steadily increased dividends. Actually, not steadily. They went from 50 cents to 65 cents to 72 cents to 73 cents, and it's been kind of steady right now. They're in a issue, they're having the uncertainty right now with the market, but they're still continuing to grow and pay out that dividend. Back in the past would have been the great time to have owned them for the dividend, and currently they're not going anywhere. They just increased their dividend here not too long ago from 75 to 77. They'll have 2 more quarters where they'll pay out that 77 cents, and then they will just continue to raise their dividend, even though they are sitting slightly at a high payout. That's one of their biggest issues that I've seen with the company, is that it does have a high payout ratio of almost 90%. So that would be one of the red flags. But overall, I did take a look at their free cash flow in comparison to their common stock payout. We can see here that they pay out $1 billion to their common stock shareholders. They have $3.17 billion of free cash flow. That's roughly 33% of their free cash flow. If they were to rely on that to kind of pay it out to their shareholders, they could definitely go that route. They also came in with a price to book currently of 8.2 price to book. That may be kind of high, but again, I kind of compared it to Wynn Resorts, another one, very similar. So Wynn Resorts here sitting at a 6.2, Las Vegas Sands sitting at 8.2, so slightly higher valuation there. But price to sales, again, Wynn Resorts and sitting at a 1.9, Las Vegas Sands sitting at a 3.3. I would say anywhere at a 3 and below, anything within the 3 and below would be substantial there as well. So it could continue to fall down, and then its valuations would be slightly better. If we take a look here at its return on invested capital, they're both sitting there, and Wynn Resorts has just kind of came down slightly, but again, as their earnings begins to do really well in the future, I do believe that the trade war will begin to get settled. Uncertainty will be gone. That'll not be an issue anymore. This company will rebound. Its price will rebound into that $80 point and continue chugging higher as their revenue, their net income, their free cash flow continues to grow. Their return on investment begins to rebound and get higher. That'll bring a lot more investors to come take a look at this company. And overall, I compared it to other ones, which we'll cover here in another video. I didn't want to drag this video on too long, so I cannot make the buy. I'm sure I probably could edit it and add it in here. Let's go ahead and try that live with you guys. Or not live, I suppose I'm not live, but I just kind of add it into my basket, add it in here, give it 8%. I'll go ahead and normalize. I'm going to go ahead and do that and escape that and save and confirm. I did not remove anything. I didn't actually need to equalize anything. I don't ever pay attention to the fragments here, but that's all equalized. And now Las Vegas Sands should be sitting down here, and let's see if I can make a buy. Now I only have 100 and X amount of cash that's going to go in here, so I'm gonna go ahead and punch it 130 in here and see what happens. I'm gonna see if it airs out. Now here is the big. It's sort of Russian roulette here. I put $130 towards Las Vegas Sands. I put $130 towards Cardinal Health. Now on Monday, M1 Finance is either going to be buying Las Vegas Sands or it's going to be buying Cardinal Health. Yeah, I'm having some issues here with the platform, so they're unable to do this on the next trade window, and that just could be, again, I tried to cancel my other buy to be able to split this up evenly between the two, and it's not allowing me to, so really I should have actually canceled that and kind of got back out. But that is all I wanted to cover in today's video. One company I wanted to add to my portfolio was Las Vegas Sands. I was planning on adding it in here, but it's not giving me the option to add the company in there. What I could do is go into I can't actually cancel it now. So what I could have done, if I didn't actually specify Cardinal Health, I could have gone and set my tab to auto invest, and then it would have picked up Las Vegas Sands as a 0% out of 3%, and then it would have targeted Las Vegas Sands, but I probably would have got targeted CenturyLink in there as well. So that is all I wanted to cover in today's video. I wanted to go ahead and add Las Vegas Sands, make a 50-50 investment between Las Vegas Sands and Cardinal Health, but M1 Finance is having a little bit of issues here at midnight here on Monday, and now it's not allowing me to do that. So that is it for today's video. Hope you guys were sort of enjoy the video a little bit here. I know I was covering a lot of information going over stock. I did a lot more research as far as I went over, took a look at their 10K, took a look at their financials over on Yahoo Finance. Took a look at a couple articles as far as what other investors are sort of seeing with the volatility here in Las Vegas Sands. What are some of their biggest issues that they're having here in the short term, which is affecting their price. And a lot of that, what I was believing was their issues, is what is actually kind of going on. Plus, they're actually showing that some of their revenue has actually still continued to significantly increase from whereas they were thinking it was going to be decreasing. But I won't go into all that information. That'll make the video way too long. So that is it for today's video. If you guys did enjoy the video, hit that thumbs up button below. If you guys have not yet subscribed to the channel, hit the subscribe button below. I cover the stock market, dividends, real estate. If you have any questions you would like to have answered, or just asked, or just left some information on there, drop it into that comment section, and I will see you guys next time. Have a great day. Bye-bye.